Alright guys, so let's have a look at SPY S&P 500 ETF. Today we are down 1.7%. This is a 5-minute chart, and if you haven't watched the video where we talked about on Friday, Christmas rally or pullback, you can check it out. But today, in a smaller scale, I just want to quickly get this thing out of the way where a lot of people ask, like, when you are trading SPY or SPX, how do you know where's the support resistance? If I don't know like basic like support resistance, or I'm not really good at drawing those supply demand zones, I would just use volume weighted average price, which is VWAP, this purple line right here. Anytime you see it below, it's bearish. And also, how far do I think it can move? So these gray zones on the chart, it's pretty much pre-market, after-market hours, right? So I look at the average true range. So basically the range that SPY has been moving for the past 14 days. That's my settings basically. And just by looking at data, that number, I can just measure the high of the day. Just out of curiosity, let's measure the top of the day today. 404, 405, and all the way to 398. So that range is $6.74. And just pay attention to this number, $6.95. So basically nothing unusual happened. So it did move within the average true range, and that's how I basically determine. So if I'm, let's say, short somewhere here at VWAP, I saw it rejected, I can just basically expect it to, I don't expect it to produce 100% average true range. Sometimes it moves outside of it, sometimes it moves less than that. So if I capture anywhere 50% of that average true range, let's say average true range is $7, and if I capture from here all the way to here like $3, I'm happy with that. I don't have to shoot for 100%. So that's that. But let's get to the SPY now, technicals. So you can see that $400 I was watching as a support, slipped below, came right back up, closed at that level. Where the weakness came. So this is the heat map of S&P 500. So the weakest big large cap names were Tesla. Tesla lost 6.7%. Pretty big. And if you look at the overall sectors, basically the biggest losers were energy, financials, consumer discretionary, and even tech. Like Salesforce was down today 7.3%. I think the biggest loser in Dow Jones, it was Salesforce. And you can see here as well in Dow Jones we have like 30 stocks. Only Boeing was positive. In S&P 500 as well, there are a few stocks. Healthcare held up a little bit better. It lost 1%. Utilities, but you can see like profit taking all across the board. And what I'm watching from here, so, and just like I said, for me it does look like profit taking. Why? Let me switch to daily chart, and we're gonna get to the data. Maybe if you have heard today that there were some data releases and a lot of people anticipating CPI next week, and also the Fed rate decision, I believe it's next week as well, 15th of December, 13th of December is CPI number. So you can look at the chart, like from the bottom of this low, we have moved 17%, and along the way you can see it wasn't smooth ride as well. And what I want you to pay attention is the bottom of the chart. I have two lines here. One is basically for average volume. So anywhere, if I see volumes, SPY volume around 60-70 million, nothing unusual happened that day to me. And if it's above somewhere 120-130 million volume, that means market moved pretty big to the downside or upside, and that volume is not normal. And you can see like in the past 2-3 months is we had only 5-6 days or so of such volume. So that's that. And also what I'm watching from here, just like we talked over the weekend, I'm watching let me bring up moving averages. So I'm watching basically two levels to the downside as a support levels, potential support. This is zone right here, 395, 393. We haven't hit it yet, but that's what I'm watching as a support and for a potential bounce. Or if CPI, if people freak out next weekend, like rate hikes and everything, if we just chop and slowly come down to 50-day moving average, that would be perfect level to basically go long. And at the same time, we have December OPEX option expiration monthly. I believe it's not quarterly actually, it's monthly, and it's a big expiration actually. So if it kills a lot of calls right there, and then after that, if market starts rallying, that's what I would like to join, somewhere around here. I don't want to overpay up there. And another thing is that we closed below 200-day moving average. So if you are bullish, you want this get back above. And also, if you are betting on, or basically if you think that it's going to break out of this downtrend, we have not yet. This blue line on my chart, it needs to build above this red line, 200-day moving average, before it tries to attempt to get back above. We did stay above there for 3 days, but today we slipped below and we closed below it. So another thing I keep an eye when I'm watching basically overall market, I look at the SPX option activity. Let's see what's going on today. What happened today? If I'm able to see it, I can tell. Okay, so you can see total volume on SPX, basically 1 million calls traded, 1.5 million puts traded. And it's basically futures. They trade 23 hours a day, so 1 hour for maintenance. Anytime I see put to call ratio above like 1.5, that means market was bearish that day. So, and there's another somewhere else I have the put to call ratio, but I can just put it. You can go to Y charts and look at it that way right here. It's already up here where you can see for every single day, and also it's on a chart. You can see like wherever it's this put to call ratio is lower, you can basically tell that people are bullish short term. And if you see a lot of and it's not a recommendation to rely on one data, but I'm just telling you that what I watch. So just by looking at this data, it was bearish, and we can slide a little bit more, or we can just chop. Okay, I know that the move was pretty much almost 2% or something, and from Friday close, if you measure it all the way to the bottom, yes, it was 2%. But actual cash hour, I think we moved pretty much what it moves typically, just by looking at average true price range. So there's not much I want to add to this. I know that energy is pulling back. I just wanted to show you what's going on with, okay, let's take a look at the XLE. Just moving averages. Yellow line on my chart represents 50-day, red line 200-day. So we're pulling back into that 50-day moving average. So energy, biggest loser, 3% down. And another one is XLF, which is financials. And it was due to pullback as well, because you can see it hit its resistance. And the red line right here is 200-day moving average. So if it pulls back a little bit more, I'm sure there are going to be some maybe buyers who will come in. But yeah, that's what I'm watching for SPY going forward for the rest of the week. And we'll definitely update it tomorrow. But yeah, just remember, keep in mind that average to range ATR whenever you are trading daily SPY. I'm not encouraging you to trade, but if you're watching, if you're trading it, yeah, use volume weighted average price, VWAP. So thanks for watching. Thanks. I'll see you in the next video. Take care. Peace.